So welcome guys, today we will do the paper F3 Financial Accounting. Accounting basically starts with recording phase. So first we will understand some of the key terms. Number one is transaction. In simple words, transaction simply means an exchange. If you can recall, a majority of the students may know that in olden days it was a barter system, or called as a barter trade, in which goods were traded against goods. So there was no evolution of money. So when money came, it was used nowadays as a medium of exchange. Money, dollar, pound, kedi, they all are used as a medium of exchange. So the bookkeeping and accounting, it records transactions so it's an exchange which is measurable in monetary amount. Understanding transaction, it will help you to understand. We record the transaction first. The transaction will result in some elements. We sometimes call it as outcome of the transaction in accounting, which involve either you are selling something, you are paying for expenses, you are buying equipments, they all are transactions. Having said that, let's start now. The outcome of transaction will be either it will be an asset, liability, income, expenses, or capital. So understanding accounting, you need to understand these fundamentals, or they're called as the basics. Now we will look at these elements precisely one by one. So what are the assets? Simply speaking, things that a business own. Let me give an example. Things that business own. When you buy something, let's say furniture, equipment, machinery, building, land, you become legal owner of the particular asset. Why? Because as a result of exchange, there is a law called law of sales of good. So according to that, when risk and rewards are transferred from one person to another as a result of exchange, the person who paid the price becomes the owner of that particular asset. So there are various types of assets. They can be categorized as non-current and current. Okay. Assets can be, they have physical nature, or they can be intangible. When I say physical assets, they have mass, you can see, you can touch, they occupy space. Intangible one, they do have the price, they do have a value, but they don't physically exist. For example, trademarks, copyrights, they don't physically exist. Goodwill, they don't physically exist, but they do have the value, they do contribute to the business. Then comes the current assets. They are either in the form of cash or cash equivalent, cash or cash equivalent, and they are held for resale purpose, and usually within one accounting period. Within one accounting period. So normally accounting period it can be a calendar period starting from January and ending at December. So if they are being consumed within 1 year, they will be titled as current assets. Now let us see some examples. Mr. X purchased a car for $50,000. Now it's a transaction, and this car, what is the purpose, why it is used, why he has purchased the car? To deliver goods. So it's a delivery car or delivery van. We classify this as non-current. Why we classify it as a non-current? Because main distinction of current and non-current is non-current is normally held for use. There are other fancy terms as well, but I will precisely use those terms. Like for example, if you go to the accounting framework or where the definitions of assets and liabilities are defined, you will see a broader definition for that, but I will try to keep things simple here. Held for use or rental to others and for administration purpose, you will find fancy terms there. So the main distinction is held for use. Similarly, for example, a car manufacturer or a car dealer buys a car for resale. Now there is a distinction. The same car before we treat it as non-current. We treat it as non-current. Why? Because it was used in the business. Now this car is for resale purpose. You have a car showroom and you are selling this car, so it will be treated as inventory or stock, because it is held for resale. So we conclude this session. Accounting basically starts with transaction. In simple term, it is an exchange which is measurable in monetary terms, and transaction will involve buying and selling of goods and services, paying to your employees, paying bills. So all of them involve transactions. When you analyze the transaction will either result, from accounting perspective, it will either result in a creation of asset or a liability, income, expense, or capital. So when I talk about assets, these are the things that a business owns. Things that we own are known as assets. Assets can be classified into current and non-current. Current assets are those assets which are held for resale purpose, and either they are in the form of cash or cash equivalent, like cash in hand, cash in bank, receivables. They are all classified as current assets. And non-current assets, they can be physical, tangible and intangible. Tangible one or physical assets are those assets. They are sometimes also called as fixed assets, because they will held for use in the business, and they have physical existence, and they will be used for production of goods and services, for administrative purposes, for rental to others. So we can categorize them as non-current assets. Similarly, we have current assets. Current assets are those which are held for resale purpose. We saw the example of a car. If we classify it as a current asset, it depends, Yani, what is the nature of the business. A car dealer will be classifying it as current asset. However, a person who is using a car for a long-term purpose, so it will be classified as non-current assets. So bye for today. I will meet you in the next session for liabilities, expenses, and rest of the other pillars of accounting.